If you're trying to build a portfolio and you're chasing rate as your number one priority, just go directly to the bank.
I think the perception with rooming houses has come from share houses. So people do think that you're getting a lot of people in there that are, mooching off Centrelink.
Underinsurance is the biggest issue that we see. Building costs, labour costs, replacement rates gone through the roof.
You'll spin your wheels, you'll try and get the cheap money rather than getting the money that's actually going to get you, or getting the funding stack that's actually going to get you the deal. If you actually already have a property inside of a self-managed super fund and you have a loan on that property.
When you are doing the same deal type and you're dealing with the same client type over and over again, your ability to get the options and the strategies to the client in a refined, fast manner.
No longer is a property manager just a rent collector for you.
For heaven's sake, if it's with one of the major banks, please get in touch with me. I actually helped a client that was on 10.74% get their loans down to about the 7.1% mark. That's almost a 4% saving. Hey everybody, welcome to this episode of Finance This, Property That. Today we have a returning guest. It's been a while. It's been a while. Luke Ashby, first home buyer guru from Emerge Finance. Also, new dad.
New dad.
Welcome.
Thank
I'm
you,
a bit
mate.
disappointed on two things.
What?
It's taken us this long to get back on the podcast, and you didn't bring Harrison.
Oh, no.
So I'm a bit.
Sorry, the boss said no, so...
Come on, Caitlin.
You know what they say?
Yeah. Happy
She's
wife.
not my wife yet, but happy wife, happy life.
Yeah, you had to think about that. I'm like, hang on a sec. But that ChatGPT photo
I knew
says
you were gonna
otherwise.
say that, yeah. That was funny.
No,
Anyway.
I like giving you shit about that. It's
Yeah.
each their own.
No,
But,
it's good to be back, mate.
Oh no, mate!
It's
like
been a little while.
There's been so much change since the last time. I think the last
know.
podcast we did with Adam and Simon, you either had Harris or you were about to have Harris. It's been that. And so, how old is Harris?
He's 8 months now.
So it's been 8 months since our last
Yeah,
podcast.
mate, that time has just flown.
I know.
It's incredible.
Mate, we've been overseas, Philippines, done all that.
Yep.
It's been a bit. Mate, how's dad life?
It's good. It's good. I'm loving it. Honestly, it's been the best. Life looks very different now. Definitely, like I had purpose before Harris was born, but since Harris has been born, like it just gives you so much more purpose and drive, and I feel awesome. Dialed in, loving work, home life, and everything like that. So it's been
Because you
great.
guys also moved. Now you're a rentvester as well,
Yeah,
aren't
spot
you?
on. Yep.
Yep.
So we didn't move far, probably
Just down the
about
road.
600 metres down the road. But we really love where we're living, and so we've rented out our place. We've got some great tenants. That's really cool.
Yeah. Still getting sleep or better sleep now?
Comes and goes, as you would know. Harris has spent his first night in his own room this week, so that's what we're going through.
You got a bit of detachment issues maybe coming up. Like,
he
I don't
was
know.
said the first night, which I think I said to you, not having him in the room, but I think long term it's not going to be a bad thing. So
No, like it beats them like sleeping in your bed. They're massive and. God, you might as well just go sleep in the other room, right?
Yeah.
And you guys had moved, like you said, you just moved down the road, just a bigger place.
Yep.
A bit more room for Harris to run around. And
Yeah. So we're only in a 2-bedder. So the reason for us going down that rentvest path was to get a bigger place. So we needed, the house quickly became smaller as we had another person in the house plus all their stuff. I mean, he's only small, but he has a lot of stuff.
Mate, they have a lot of stuff. I think that the biggest tip I can give you is when you get new stuff, get rid of equivalent old stuff.
Yes.
And if it's still good,
Yeah.
stick it on Facebook Marketplace. And just go, it's free to a good home. Someone will pick it up.
Yeah. You don't have to convince me, mate. It's more the other half sometimes.
Come on, Caitlin. It's not a Tesla battery. Won't catch on fire. Facebook Marketplace is good.
Yeah.
No, look, because you accumulate a lot of stuff. I just remember one day we had like 6 black garbage bags full of Charlotte's old stuff.
Yep.
I'm like, we can just reuse this.
What are we
Just give it
doing with
away to
this?
someone
Yeah.
that needs it.
Yeah.
So,
Yeah.
you'll have that soon. Not yet, but I think you'll have it soon. Just people just give you crap.
Yeah,
just
I know.
like-
I think people are a bit better these days, and they understand maybe. Also, maybe gift cards and that sort of stuff, which is great. I mean, it's nice. I remember when Harris was first born, Caitlin's mum came from Scotland, and she came with a full 30-kilo suitcase full of clothes for Harris, which was fantastic. In the back of my mind, I'm thinking, where the hell is this going to go when we're in the smaller house? Obviously, moving into the new place is great. Obviously, we've got the tax deductibility side of our loan now, and the expenses and all that stuff can be claimed. And there's a lot of positives to rent vesting, right?
Yeah.
Like you're doing it as well. So,
And it's also as a business owner, it allows you to scale appropriately too.
Yeah.
The only thing I'm thinking about with your mum, Caitlin's mum coming in with 30 kilos is, geez, I hope they all weren't the same size, because he's probably going to be
No,
growing
that's right,
very quickly.
Exactly.
Like, I hope at least 66% of those clothes were like 2-3 sizes bigger, so he actually grows into it.
No, she was good. She's good to us. We're very lucky.
Wouldn't it be funny if they were all size zeros?
Yeah.
Like, 2 weeks. Rags? Rags, anyone?
Yeah. The
Just spew
problem
rags.
is, Caitlin doesn't want to get rid of them either, in the event maybe number 2's down the track too. So
True.
Look,
Look,
life's good, mate.
That's good. It's good.
Yeah.
Mate, look, let's get cracking, because since the 8 months that we haven't talked, there's been a lot of changes to your niche, which is first home buyers, the grants, the policy. So I want to just start off and let's talk about the grants that are available and how they've sort of changed and what policies have changed and what impact is it actually having on first home buyers.
Yep. So like you said, I'm really passionate about the first home buy space. So I'm talking to them every day. I see the struggles that they're going through. I see the wins also. There's plenty of great wins. There's been some big changes since we caught up in terms of policies and government, scheme changes and stuff like that. It's great to see some of the lenders loosen the shackles a little bit in terms of policy to help first home buyers when it comes to borrowing capacity. So I guess the biggest ones that I've seen is, in regards to HEX debts. So, some lenders, if the balance is under a certain amount, they'll ignore HEX, and that can make a big difference because, say you're a professional on, 100, 150 grand a year, your repayment for that HEX is quite a lot.
It's like 10%.
Yeah, so without factoring in the HEX debt, that increases their borrowing capacity significantly. Even if you're on less than 100, it still makes a big bump in borrowing. So that's really good to see. And then we saw one of the other lenders recognise, renting out a room as well. So that there helps to lift the needle a little bit. So there's been some changes by a couple of lenders to help the borrowing capacity side of things because they realise that property prices are continuing to rise and they want to try and help the first home buyers to get in. So there's some really cool changes. There's also, in terms of the government scheme changes that we've seen, the 5% scheme come into effect in October 1. So that was a huge one, and that's really driven competition and demand in Brisbane specifically. So they've increased the price cap. It was 700,000. It's now 1 mil. There's no income cap thresholds.
Oh, thank
so that
goodness.
was
some of the methodology behind some of this,
Yeah.
it just baffles you, eh? I could go, hang on a sec. 700,000 in Brisbane. Come on, guys.
Yeah.
Man, that was so
It was very
hard. You're
limiting.
what do they get? Just a
Yep.
shoebox.
Yeah, you
Now
were
it's a
buying
million.
an apartment, like it had to be an apartment, or you were moving a long way out from Brisbane, and that was impacting people because, they would live in a certain area that was suiting their lifestyle, and maybe needed to be closer for work, and then there was all these challenging things where it's like, oh, I'm gonna have to live further out. That means a longer commute. There's lots of limiting factors there. So anyway, there's been a big change there, and that's been great. No income cap thresholds, which is fantastic. It's still available to Oz citizens, permanent residents, Kiwis moving over. So that's available for the 5%. So, but also
And the
for
spaces, isn't it? They've removed
Unlimited
the spaces now, haven't they? Because there was that other issue where they only had a certain amount of spaces, and then you guys had to at the end of if they hadn't found something by the end of the financial year, to re-get your space and your slot, and that was just doubling the work.
It was, yeah. It become a bit of an issue, maybe not last year, but the year before, maybe when it was a bit more achievable to buy under 700. But I think by October, it was really like there was plenty of spots because people weren't able to find properties under 700. So, but yeah, anyway, so there's unlimited spots, which is fantastic. So now that scheme's in effect, we're seeing properties from 700,000 to 1 mil be extremely competitive. And yeah, I'm often hearing this prices getting away from people wanting to buy for say 800, 850, which back in October was a pretty palatable price point to be able to buy a house in Brisbane, but that's slowly sort of creeping up.
Brisbane average house price is 1 point. Well, it's over a mil.
Yeah,
or
correct.
Just a tad, just a smidge over a mil.
Yep. So yeah, if you're wanting to sort of get in under that scheme and buy under 1 mil, you want to do it relatively quickly, particularly if you want a house.
Yep.
Yeah.
How are your random question? But how are your clients that you work with finding these properties? Are they using buyers agents? Are they
Definitely seeing more take up on buyers agents?
Yeah,
100%.
Because we had Jess on here not too long ago, and she helps first home buyers with different price pointing for obviously because realizes we know you don't have much money.
Yes.
Like how can I help you and add as much value, but also sustain myself as a business?
Yep. No, she's a weapon in that space, and it's great to see a buyer's agent like her and her expertise actually cater for first home buyers in terms of price point for buyer's agent fees. They're not free, and they do cost a bit of money, and first home buyers are often scrambling for cash. But yeah, with someone like herself offering her services at a discounted rate, it's
and I think it was pretty heavily discounted.
Yeah,
it's not the same as if you and I come into her as an investor, which is very, very generous as a small business.
Yeah, and not all clients have that ability to have that extra cash up their sleeve, but the ones that do, I'm often having these conversations around, have you got the time each weekend? Like how often are you how long have you been looking? What are the challenges you're finding? If it's, you don't have the time to commit to locating these properties, going to midweek opens, going to open homes every weekend, keep getting priced out, well, then a buyer's agent absolutely makes sense. Like I can see they're worth weight in gold. It's worth their weight in gold at the moment in this market.
Yep. So you just mentioned... Are there any other grants that we need to look out for before I go? Because I've got a burning question. So
yeah, look, we covered off on them probably in the last podcast. They haven't really changed. Like you've got first home owner grant of 30 grand.
That's for new properties.
For 750, and there's no stamp duty on any value if you're building now. That might be one that hasn't been flagged recently.
That hasn't been flagged. No.
Yeah.
So what's that? Explain that to me a little bit more.
So if you're building a home in Queensland up to any value, you won't pay stamp duty on the land.
Yep.
But the first homeowner grant is still quite limiting at the land and the build value needs to be under 750, which is that's quite
how
limiting.
How do you have such a big disparity between this and that? Like, that just makes no sense.
Yeah.
What are you buying? What are you building for 750?
That'll have to be reviewed, hopefully.
But that's a state government one. That's not a federal.
No.
That's probably why.
There's also the Help to Buy scheme. It's not something I get too excited about because that's when you're going into ownership with the government. It will help a segment of the market. It will certainly help more people than not having the scheme in there. But that's something that a certain few lenders direct can help you with. But for the lower income earners, little deposit, that's something I'd be looking at. You're going into ownership with the government and you've got to pay out profits when you sell eventually, and you're carrying all the the rates costs, the maintenance on the property and all that sort of stuff. But the government's still helping you to get in, so it's better than perhaps being in a rental where rental prices are increasing and you're at risk of getting kicked out. So that's a solution.
Yeah. Do you see a lot of the 2% deposit ones or the
I don't, but I feel like
ones?
I'll see more now because of the income cap thresholds are being wiped. So for what you're talking about there is the single parent 2% scheme. For any single parent, 2% deposit plus costs, and you could have the same set up as the 5% scheme where the government goes guarantor for the remainder up to 20%, so you don't pay the LMI. So that's a really good option for any single parents out there that are looking to get into the market, and you don't need to be a first home buyer either.
Really?
Yep.
But you have to be a first home owner.
No. So you can't have owned property currently.
Yeah, that's what I mean. Yeah, first time. Like you can't.
To get back into the market, say you've just had a separation and you want to get back into the market, that's a really good option.
Right.
No income cap threshold, again, no scheme spot restrictions.
So they treated basically a 98% loan as a 80% loan, so you get the same rate. And the same people on the government's, the same people on the scheme are doing that. So basically it's the same panel of lenders?
Yep.
Okay, great. So there's not like other lenders that do that.
No,
it's just that panel.
Yep.
Signed up. Oh, okay, that's a really good option. I didn't realise it was for a subsequent purchase if they'd separated either.
Yep.
I thought it was pure first home buyer.
Yeah, so that's probably something that doesn't get talked about enough. I feel like I'll see more of that since October 1 than I did previous, because that was a limiting factor around price points and incomes also.
Yeah.
Yeah.
Okay, cool. So, all right, we just touch base on, or you touch base on the competition increase now. You know, the cap was 750, now it's up to $1 million, but now, lots of people are struggling to get property there. So they're struggling to get the property, but let's say they get the property. How are they financing these deals? Like, what are some of the options you're going through with your clients to help finance these deals? Whether you use whether you use a scheme, whether you don't use a scheme. What are some of those cool things that you're doing?
Yeah, so it's good that there's a few options out there. So you've got the 5% scheme. So if I'm not doing the 5% scheme, then the other ways that we're helping is through guarantor loans, so family guarantor loans. I've never written so many family guarantor loans in my life.
Well, you do sit next to Adam,
the
guarantor king.
Yeah, mate. I was telling him this morning. I was like, I've never written so many in my life lately. Like it's a great solution, and it's basically, if you didn't have the 5%, say you had less than that, still wanted to get into the market, you had great capacity in terms of income, then with a guarantor, you can actually borrow theoretically the full purchase price plus the costs on the property. So you could get in with zero deposit theoretically. And so the government places a guarantee against mum and dad's property. It could even be a sister, brother, close family. They place a guarantee on their property to secure yours so you don't pay LMI. Get access to an interest rate if you had a 20% deposit. So that's a really good one. And that there applies to not only if you're going to live in the property, but also if you were to rent it out. So
the restrictions are less.
Yeah, and it's also available to people that have owned property. It doesn't have to be a first home buyer. And if you've got an existing property now too, you can theoretically with some lenders do a guarantor loan for property number 2. Yeah. That's a really cool option. Where I've seen it work really effectively is for, a single income earner in Brisbane, right? To get into the property market, you have to earn significant money. It used to be probably 120, 130 last year, but it's more than that now, I reckon, per year. So where it's helped them is that if they're living at home with mum and dad, not paying any board or paying minimal board, then we can use notional rent to help. Obviously, the lender needs to factor in the costs that you're spending to live where you are currently, but we're using the rental income on the new property and buying an investment property to help get into the market, and that's often a better outcome from a borrowing capacity perspective, is to go down that path.
Yeah, because then you've also got the gearing or the interest deductions that you can claim back if you're a high income earner. You're on a higher tax bracket, brings that taxable income back down with the refund, and then it just kicks into a higher borrowing capacity. But then it also gets them in the market. Yeah, I think that's the most important thing. Yeah, I don't know. Correct me if I'm wrong, but my sort of thought process. Great, if you're a first home buyer, you need to understand all the options. I think people, when I was first starting out in lending and people buying, I need the grant. I must get the grant. And that was cool back then when it was, you could probably not, you could spend a bit of time. Right now, the market's moving so fast that you got to figure out, well, is the grant worth me missing out on property? Or if I can't afford a $1 million property, but there's an investment property that's worth $850 and it's still going to do the same thing, it's going to start my portfolio. Is it better that I forego the grant?
It's challenging right now, the way the market's moving. It's challenging that thought of, I'm only a first home buyer once, I've got to use all these incentives. But if you're using all these incentives, is it even achievable to get what you want and need?
Well, this is the
and
thing.
it's often not achievable for a lot of people, particularly single income earners.
Well, I've got the exact same client. She was referred to me by her brother, and she's single,
Yeah,
lives in Victoria. Great deposit.
yeah,
This guy, I don't have a plan. And I said, okay, well, you're going to buy your first home. Are you happy not getting the grants and everything? She goes, I just want to get into the market. I've just sat on my hands
yeah.
so much. But the deposit that she has, she can get like 2 or 3 properties, and the income that she earns, she can get 2 or 3 properties. Her biggest goal was, I just want to be able to get properties and then still work and do what I do, but I want to go still keep doing my travel.
Yes.
And I'm like, have you thought of a side hustle with your travel? Do a travel vlog and get sponsors and get income, another stream of income.
Yep.
I didn't think of that. So, there's different ways to help clients and help them understand. But I think what you provide is really good education for first home buyers. And it's not
Think
all
a bit
about
differently.
Yeah.
Think outside the box.
Yeah. What's the goal? Is the goal to buy, is the goal to get, you're not going to live in that property. Stats say you'll change properties 3 times before you find your owner occupied. Some of people won't even, that's when I first was buying property, but you're not going to live in that property forever.
No.
So if you're not going to live in that property forever, you want to be stuck there for 12 months. Is it 12 months or 6 months? No, if you're getting the scheme,
if you're on the
it's very,
scheme, it gets technical, but you can't rent that property out until you've got 20% equity.
Yeah.
Or you refinance and pay LMI in that case. So they're the restrictions there. But yeah, for the stamp duty, that's the case.
Yeah. So
That's the other thing. Sorry, stamp duty waiver has gone from 500. You weren't paying stamp duty. 550, you get some concession, but it's now 700 and under. You don't pay stamp duty. 700 to 800, you don't pay as much.
yeah, it's like a sliding scale.
Yep.
Yeah. But I mean, do you buy a property that you're going to live in for up to 12 months and then hope that it goes up 20%, up, 15% to get you off the scheme to be able to rent it?
Yes.
Or do you find something a little cheaper, rent it out, it's all pre-tax income or pre-tax,
Paid for
pre-tax dollars.
Yep.
Live where you want to live, like we're just talking about rentvesting, so that you don't have to pay as much on transport, your lifestyle's not changed, but you still accumulated a really solid asset that's growing over time, giving you a bit of an income and a tax deduction.
Yep. Yeah, I think people are starting to catch on to the fact that they need to move quickly if they're going to get in, and they need to think, challenge their original beliefs around things that, I'm going to buy a place in the suburb I grew up in, where my parents live. It's often not the case.
Yeah.
The people are starting to catch on, and I'm big around educating, as you know, and I have those conversations, and I'm often, we'll work out, okay, this is the budget if you're going to buy to live in and perhaps under the scheme or guarantor loan or whatever it may be. And then we're jumping on realestate.com, having a look at the sold section, have a look at the last 3 months data and be like, okay, is this actually achievable? So, because I don't want to waste their time, going out trying to find a property that's not there. Because as you know, houses went up 1.2% last month. So things are moving quickly. So in that case, we're like, okay, all right, let's pivot and maybe look at an investment property. And like I said, if they're living at home with mum and dad, that's a really prime example. Relationship's good with mum and dad. They're not going to kick you out in 6 months. If it's a healthy relationship and it works, then that's a really good way that mum and dad can help you get in and get a solid asset. So that's something that we're looking at. The other thing where parents are helping, and I've seen, huge help by parents is through gifting money. So the bank of mum and dad. Yeah,
which is the biggest bank in Australia at the moment.
It is, mate. It's the most... They've got the best terms I've ever seen from a bank.
Mate,
something I wish I had available, but incredible. So that's great. I think parents are realising as well the state of the market. I've had stories recently where kids have got pre-approved, they're having a look, and the parents are going out to have a look with them, and they're after the first open, they see how many people were there, how competitive it is, and they're starting to realise, shit, they're going to need some help. And so I'll get a call the next Monday being like, hey, mum and dad have, they realised what it's like out there, and they're going to gift us some money. So
puts them in a different bracket.
Yeah, it does. Changes the game. So, but not everyone's got that ability. I'm not
Yeah.
saying you need that to get in. You definitely don't right now. But it certainly helps bridge the gap between your borrowing capacity and that property that you're after.
Yeah. One thing I will say on the banker mum and dad, if they're gifting money, and I spoke to, I had Jill Johnston on this podcast as a family lawyer, mate, as much as you want to believe that your son or daughter and their relationship's going to last forever,
Yeah.
the parents need to protect themselves
Yeah.
in case there is a separation, etc. Especially, and even if they're guarantors and all that sort of stuff. It is worth getting some extra advice
Yeah.
from a family lawyer, accredited family lawyer, like a Jill from the law people. They've got very easy conversations to have and protecting yourself.
Yeah. There's some big gifts getting thrown around.
Yeah. And, there's all those blurred lines between, who contributed that? It was a gift. And
Yeah.
do we have to pay that gift back when if people separate, emotions get high.
Yes.
So where do you, if you've got it documented, etc., you can protect, the parents can protect themselves, the kids protect themselves, and then overall, there's no if, buts, or maybes. Well, mate, this is what we've done. And to be honest, if they're not willing to sign it, should you be buying a property with them anyway?
Yeah,
It's a
probably.
massive red flag.
Yeah. I think parents, obviously, instead of the money going to the kids when maybe they're gone, they're realising maybe we can help them and actually see them use that money and, create
But
some
then
wealth.
if there's a partner involved, then be very buying the house together. I don't know. That's just the only thing that I always tell my clients to do if they're getting gifts from parents.
Yeah.
I get you guys are married and stuff. I want to speak to your parents.
Yeah.
Hey, do you know that these are the risks involved? I know I don't need to. Not my job.
Yeah.
But I know I can go home and sleep at night
Yes.
going, hey, man, I gave them all the information. They're not going to come back to me if they separate and going, oh, you didn't give us this information. Like, man, I did. You guys chose not to listen.
Yes.
And I gave you things. But anyway, it is a wild west, as we like to call it.
Yeah.
But, mate, you've had a really good win lately with a client that I think was in LMI, and with this market moving so fast, it just shows you. We're talking about how do we get out of LMI.
Yeah.
So do you want to just explain a little bit about that?
Yeah. Yep. So these clients, this is pretty cool. So these clients, they bought 6 months ago. They paid lender's mortgage insurance. They lended up to 98% of the property's value. They weren't eligible for the 2% scheme. They were a couple. Didn't have the banker mum and dad. They didn't have a guarantor loan to assist with not paying LMI. We went to a lender. They paid LMI. It was about $35,000 in LMI premium. The rate as well was ugly. Wasn't great. However, they realised that it was the price to pay to get into the market. They knew how fast the market was moving, and it was an opportunity that the LMI gave them. It was an enabler.
You educated them on that. You educated them to help them make that decision, informative decision.
Yes.
So-
Because obviously property market's going up 1% a month in Brisbane. You can't save that fast.
Yeah, correct.
So I think they bought it was about $890 from memory. They went in with a smaller deposit, paid the LMI, paid the stamp duty. 6 months on, as part of our review process, we go and get some valuations done with that lender that they got the loan sorted with. They didn't come to the party. Valuation wasn't very strong. So what we do is we often get a couple of other valuations done. Another lender come in at a very healthy value, allowed them to refinance and not have to pay LMI. So they actually ended up saving $700 per month. And I think it was $198,000 over the life of their loan they saved.
Wow.
And
interest?
then,
No,
sorry?
in interest or repayments?
In interest.
Yep.
Yeah, $198,000. $700 a month saved them on their loan. They ended up fixing, so they've got some certainty around their payments at a lot lower rate than what they were paying.
Yeah.
And also, I've actually caught up with him not long after, and I said to him, mate, I would check with your lender to see whether or not you might be able to get a refund on your LMI. And anyway, he called up and he's eligible for 40 to 50% refund on the LMI.
Because it was done within the first 12 months and it was refinanced out.
Yeah.
Yeah, I had a client very, very similar to that. And how much was the ref? So about what, 70, if it was 50,000?
No, it was 35,000.
So 35,000, 50%, say 17 and a half.
Yeah.
Mate, tax-free 17 and a half.
Yeah. So he's already said to me, we're going to pay off the wife's HEX debt. Obviously, cash left over. Happy days.
Well, that increases cash flow and then reduces that, increases cash flow, then also increases the borrowing capacity.
Yeah. Yeah.
By doing that. And then what? That then now puts them in a position to go potentially another 6 months' time by getting to the investment market and double their portfolio.
Yeah. So that's a pure example as to getting into the market and letting time do its thing. It wasn't a lot of time, and the market's never going to be as hot as it is now, I don't think, for the next couple of years, yes. But, that's, obviously they wore the LMI. It enabled them to get into the market, and it's a prime example to show what can actually come off the back of it.
Yeah. I tell this to clients all the time. You just get in with what you can. There's never going to be a perfect situation. Get in with what you can, make an informed decision, surround yourself with the right people.
Yeah.
And you got to let time do its thing, because property prices, I don't think it's ever been easier or harder to buy a property than it is now.
Yes.
It's easier because lending's pretty easy, but it's harder because stock's so low and there's so much more competition.
Yeah.
Now, to combat that in the middle is you've got to be organised.
Yeah. Yeah, there's such a lack of education, and it's through no one's fault really, because we don't get taught this stuff at school. Unless you're working with a good broker that's specialised in that relevant field, it's dangerous.
But what about not enough education through school? But then on the flip side, there's too much not bad stuff, but there is quite a bit of information on the web.
It's true. That is also the Wild West.
It's all bloody irrelevant information that doesn't even... There's advice being thrown around that shouldn't be thrown around. You just need to change one word and it doesn't become advice.
Yeah.
So I think people like yourself who don't give advice, it's like you give facts, which is very different to advice, which will actually make yourself stand out, and then you're attracting the right type of clients, not the cowgirl clients there. But mate, what do you think is going to happen in the next 6 to 12 months with first home buyers and the market? Like, what are you feeling? You probably can't give a full
it's interesting. Been asked that a lot lately. Obviously, we had the rate rise recently, so get the crystal ball out again. But it's interesting. I don't think it's going to slow anytime soon. If we have another couple of rate rises in a row, people might take stock, and there's still plenty of people moving here. There's limited stock, so naturally prices will continue to rise. For first home buyers specifically, if I was listening to this and I'm a first home buyer, I'd be having a chat with a broker, see what my position is right now, and map out a game plan to get in ASAP. Have a look at those two options that I mentioned, whether it's to buy to live in and get access to some incentives, or look to maybe buy an investment property. So make sure you're running those scenarios, because sooner rather than later is my advice or my thoughts.
Get in.
Yeah, because with that new scheme, price cap lifting, the prices are just getting a bit out of control within that 700 to 1 mil bracket. Yep.
So maybe even just like get in, but think outside the box. Get the right advice. Think outside the box.
Yes.
But you got to get a foot in the door one way or another, and take what you can get. Classic example: your clients. They took what they could get.
Yes.
They didn't get upset, but realised that there's light at the end of the tunnel, and it wasn't a forever solution.
Don't talk to an order taker would also be my advice around buying your first home.
E.g., don't go direct to the banks.
Yeah, if you're saying, hey, I want to get on this 5% scheme, blah, 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 and the order taker runs through that option only and doesn't look at what else is on the cards for you, that might be a costly mistake.
Yep, because you bought the wrong property, and then you're stuck there.
Yep.
You can't move.
Yeah,
I
you
think
want to know all the ins and outs,
Yeah.
especially around the scheme and the grants and all that. Everything, it can get complex, and
Yeah.
like when I'm talking to clients, it's I try and make things as simple as possible for them to understand, and so that they're informed. There's so much complexity around it. It's easy to get confused.
I think that's why there's a bit of danger going direct to bank, because
Yep.
you're only going to get that one bank's policy, whereas a broker's got the whole panel of first home buyer grant lenders, or almost,
Yep.
depending on your aggregator, but then also other options.
Yep.
And other policies that we can leverage. Like there's a lender that does 1% bloody assessment rates on investment properties. Wow, and I know you've used that policy to get a client into an investment property. There
Yes.
are lenders that are doing 40-year loan terms.
Yep.
Now, is that the right thing? Who knows? It's not for everyone. But if you're just going direct to one bank, you're getting one policy and one product, and
Yeah.
that's all they can do.
Yeah.
That's why it's important to know your options.
Yeah, spot on. The other thing that we didn't mention on was one of the lenders on our panel recently coming out, lending up to 90% with no LMI.
Oh, yes.
Yeah, so typically, LMI waivers might be for professionals, lawyers, doctors, physios, etc. But this lender's doing no LMI for any occupation,
Yeah.
for investment or own occupied. So
Yeah.
that's another option.
And the cost of that is, the rate's a little bit higher and different because they're
Yeah.
not giving you an LMI waiver as a professional.
Yes.
They're giving you an LMI waiver because it's part of their policy. So the pricing will be different, and that's fine, but you're also saving 10%.
Yeah. And they'll, as your equity grows, pay the loan down, they'll reprice at 85% and at 80%. So
And I know that bank's very good at retention.
they are one of the better ones.
One of the better ones. I reckon that's what I'm struggling with at the moment, Like a lot of the retention on some banks,
Yes.
mate, they make you jump through hoops. And, I even had a client, especially because the property market's going up.
Yeah.
I had a client with $1 million loan, they paid the LMI, so we went up to 90%. But now they're 77% because we revalued the property 12 months later. And
They won't budge.
they won't budge. And
Yeah.
I'm sitting there going, well, I've got to evaluate. Why did you do a valuation if there's no happen? Like, why not?
Yeah. Well, we're doing the right thing by the
I'm
client.
doing the right thing by the client, and you're not doing the right thing by the client.
Yeah.
Now, I got that overturned,
Yeah.
right? Because I've got a very good relationship with this bank.
Shouldn't have to go.
But I shouldn't have to go that
Yeah.
high. In this generation where banks are relying on speed, which is great,
Yes.
I reckon the speed's gone up and the bloody common sense has gone down.
They're making decisions too quick.
Exactly. It's good, but there's no
Yeah.
human touch.
Yes.
Hang on a sec. Is it going to cost us more to retain a client,
Yeah.
or is it going to cost us more to get a new client? Mm-hmm. Hey, I almost had to move those clients. With another client, they wouldn't move.
Yeah.
And I had to move them
Yeah.
because they were getting 0.27 or 0.28% less.
Jeez.
And there are a sub 70% LVR. I'm going, come on, guys.
Yeah.
How is this the client's fault that the market's moved that fast? I think then that's where,
Short-term thinking, eh?
I'm like, man, you got to get better. Like the lending market has got, like some of these lenders have got to get better at retention
Yeah.
because, if we've got to move a loan within 2 years, we're getting clawed back as well, right? But it's the right thing to do for the client.
Yeah. Yeah.
And
Spot on.
I think it is.
Yep.
I'll always do the right thing by the client, but also it's resources and cost. It costs the business money.
Yep.
But I'd rather keep the client happy to a certain point. And if they're making judgments on I want to move because I'm only getting 0.1 difference, it's going to cost you more.
Yeah. Moving all your banking and stuff.
Like,
over.
but
Yeah.
the cost to move a mortgage, I've just done one, but it made sense for me because of the policy. I needed to do what I wanted to do.
Yeah.
Mate,
If it makes sense, play
Correct.
on. If not, yeah.
But that's what I'm finding, just the repricing on a lot of the mate, it kills me because
Yeah.
you're promoting these banks as, hey man, they're really good, they'll look after you.
Yes.
But they're really only looking after this.
Yeah, but they don't give a toss once you're on their books.
Yeah.
Yeah.
And that's,
Yeah.
but there are some really good banks that do.
Yeah, spot on.
Cool.
Yeah, and over time, obviously, we know the ones that are
Correct.
good at retention
Yep.
and the ones that aren't. And
Yep.
that does factor in a recommendation.
Correct. And it has to.
Yeah.
Because it's best interest duty.
Yeah. Yeah.
Do
And
we
if
need
you-
to move the client?
I mean, if you've been doing it for 5 minutes, you're not going to know that, right?
No.
But
no.
if you've seen it over a long period of time, that
Yeah.
does weigh a factor.
Yeah. And there are, like I said, I use a couple of, you and I both use a couple of really good coloured banks that, different colours that do it. I don't like to say the banks on here because we're not bank bashing.
No.
But
BDMs won't answer our calls.
yeah, no, the BDMs will, these BDMs will answer our calls. But it's hard, right? They don't make the decisions either, but they're there to support us and they're there to support the clients. And overall, I think our BDMs do a really good job.
Mate, we were very lucky.
Yeah.
We are very lucky.
I reckon we've got some pretty cracking BDMs. Oh,
Yep.
we can name some.
Yeah,
I reckon
yeah.
we name some.
Yeah. Shout out to Alana.
Yeah, Lana from Bank West.
Yeah.
Sally from St.
Sally's
George.
a weapon. Yep. Yep.
Raz from
Raz from
Macquarie.
Macquarie.
Who else?
Ben Hutton from Eubank.
Yeah. Ben's a good guy, isn't he?
Yeah.
Also, Sue Kennedy from Think Tank to Connective Advance. They're a white label product.
Mandy from ING.
Yep, she's a legend. I think she's coming out soon to visit us. Reese from Latrobe.
Yeah.
And just there's heaps that we
There's
can
heaps
mention.
yeah.
But you
We're
guys know who you are, and we really really appreciate that.
Not only makes
service.
our life easier, but our clients as well.
Yeah,
Yeah.
exactly.
It's so I remember losing a great BDM last year, and it hurt.
It changed the way you use that bank. It didn't feel right, and I get a lot of BDMs going, let's have a meeting. I'm like, mate, and there are actually two very very big banks.
Yeah.
I don't even know who my BDM is.
Yes.
Now, if I don't know who my BDM is, how am I going to get the support to make sure? Because all my deals are pretty curly. They require help and assistance. How do I know?
Yeah, a good BDM's worth their weight in gold.
Yeah, if you're BDM and you haven't contacted us, you might want to contact us because we're writing a lot of business. There's 5 brokers, soon to be 6.
Yeah.
No, there is 5, and Marcus.
Yeah.
Yeah, so
Growing.
yeah, it is
exciting.
growing. Well, mate, look, appreciate your input and your time.
Pleasure. Thanks for having me.
Mate, always a pleasure. It's been too long. We can't leave it 8 months next time. It's not good enough. Probably need to have another panel podcast. I think I was talking to you about that the other day.
Yeah.
But mate, look, how does you've got a bit of education out there? How do people get a hold of you, and how do people get part of your get on your education program?
Yeah, so if you're online, social media, Luke Ashby Mortgage Broker, they're my personal, channels in that space. But then, in terms of first home buyers specifically, as you know, I'm really passionate about it. So I created a Facebook group called First Home Buyers Club Queensland. Just over 750 members in there now. So it's a great little community, something I'm really proud of. And it's just purely an education hub. There's no no advertising, no marketing, just to try and help educate people that didn't get taught what I know now, and something that I want to pass on. And we run online webinars and have special guests and that sort of stuff on there. So
awesome. And obviously you can go back and listen to all the other podcasts Luke's been on 8 months ago and beyond. Guys, like I said, on this podcast, all the information is very general in nature, doesn't take into consideration your personal circumstances. If you are a first home buyer looking at your options, speak to Luke. If you can't get hold of Luke and you want to speak to me, you can speak to me as well, and I'll be able to put you on to Luke as well. We work really well together as a team. I can help first home buyers. Is it my niche? No. But I'll definitely be able to guide you and have a really good conversation with you because I have been a first-home buyer. I own property as well. You can find me on Instagram at Dion Finance Specialist, LinkedIn, Dion Fernandez, this podcast, financethispropertythat.com.au. Mate, thanks for coming. And everyone else, I'll see you on the next episode.